Welcome to StockStream's Education Series. This presentation is brought to you by StockStream Financial Services in collaboration with MyStockStream.com. Today, we will look at different charting techniques available to technical analysts. Trading inherently is risky and may not be suitable for all investors. Therefore, we recommend that you treat the contents of this presentation strictly as educational and informational in nature. Our goal at StockStream Education is to increase the awareness level of investors. We propose that you learn concepts of analysis using StockStream Education's training material. Then follow StockStream experts at MyStockStream.com to see the techniques you have learned being applied to live markets. Once you are comfortable with a particular technique, we recommend that you conduct your own analysis, get it reviewed by a StockStream expert, and then put it to trade in live markets. Let us get started with the lesson. Charts are basically graphical representations of price action, with the x-axis showing the time and the y-axis showing the price. There are different types of charting techniques commonly used by technical analysts. Line charts, bar charts, and candlestick charts are the most common ones. These techniques differ in the amount of data that is captured and the representation of the data. We will go over each of these techniques in more detail in subsequent slides. My personal preference is candlestick charts, but all three charting techniques have their own advantages and disadvantages. Line charts connect the closing prices for a trading session by a straight line. This is the simplest form of a charting technique. The good thing about these charts is that they are simple. They do not capture a lot of data, and that is why if you're looking at longer-term charts, it is very easy to identify chart patterns in Elliott wave counts. So I use them all the time for looking at longer-term charts. On the downside, there is no way to gauge intra-period sentiment by looking at these charts. Intra-period sentiment is important if you're trying to identify a shorter-term reversal or continuation. So I would not recommend using these charts for shorter-term trading. Bar charts are one of the more popular charting techniques and are used by a lot of technical analysts. These charts capture way more data compared to line charts. If you look at a sample bar, we have the opening price indicated by the left bar, the closing price indicated by the right bar, and then we have the high and the low of the day. As pointed out in the earlier slide, this intra-period price data is very important in identifying shorter-term reversal or continuation patterns. By using these charts, you can also identify gap opens in the market. Gap opens are important because they have a tendency of getting filled. For example, if you have a gap open and the market rallies, from there you can short at resistance and place a limit at the gap. The only reason why I do not use these charts is because I find them difficult to read on longer-term time frames. Even though the bars are color-coded, it takes me extra time to read these charts, so my personal preference is candlestick charts over bar charts. Candlestick charts are my absolute favorites. They capture all the information in a bar chart and are way easier to read. If you look at a sample candle, a bullish day is indicated by a blue candle, and a bearish day is indicated by a red candle. The colored part of the candle is called the body, and the lines are called the wicks. For a bullish day, the lower end of the body is the opening price. The higher end of the body is the closing price. The lowest price for the day is the lower end of the wick, while the highest price of the day is the upper end of the wick. Now, because we are capturing intra-period data, it is very easy to identify reversal and continuation patterns. We can also identify gap opens in the market using this charting technique. Further, candlestick charts, as you can see, are very easy to read on a longer-term time frame. For example, just by looking at the chart, I can identify a reversal pattern here, and then another reversal pattern here. We are going to have a whole lesson dedicated to candlestick charting, so we will stop our discussion on charting techniques here. If you have any questions, visit mystockstream.com and contact us at StockStream Education. You can also contact any of our other experts covering Forex, commodity, or equity markets. We will be more than happy to answer any of your investment-related queries. Thanks for listening to this presentation and have a good day.